As you can see right now on the screen, this is the setup that formed this week, Friday, 21st of October. And looking at my screenshot, you can see the sniper entry that I took of this setup. So I'm not just going to be breaking down the setup for you, but it's a setup that I actually took myself. It's not just hindsight, but it's something that, of course, it's a strategy that I have grasped. I have made it mine. It's now my model, and I'm sharing it with you right here. With all that said, let's dive into the charts right now. Let me break it down to you step by step. Probably by next week, when you're going to be going into the charts, you can get yourself these kind of setups. When we get in front of our charts, the first thing we do is to define our range, and our range is going to be 8:30 to 11 New York Standard Time, that is UTC -4. That is the first thing we do, and we denote that using vertical lines. That is 8:30 and 11. That is what I do first when I get in front of the charts. Now that we have denoted our zone that we are going to be trading within, the next thing that we do is to look for any highs or lows that are just beside price, any high above price, or any low that is just below price, that we are going to be looking for price to trade above or below. Looking at the charts right now, you can see there is no low below price, and there's just a high above price. So that is what we are going to be denoting right now. We'll be denoting this high above here, and we'll be waiting until price trades above this zone. Then that is when we are going to be looking for a setup to trade. Now, as you can see, price has traded above this zone. The next step, or the next thing we are going to do, is to drop down to the 1 minute time frame, and it's in the 1 minute time frame now that we are going to start looking for a setup to trade. On the 1 minute time frame, what are we looking for? We are looking for a good impulsive move that breaks structure and forms a fair value gap, and we are going to be taking our trade on that fair value gap. Now, what is a fair value gap? A fair value gap is when we have, let's say, for example, 3 consecutive candles, and for the first candle, the high of that candle does not meet with the low of the third candle. So you can see here the high of this candle did not meet with the low of this candle, right? And that space or that gap there is what we call a fair value gap. Now, we don't just take any fair value gap that we see on the charts. We take some particular fair value gaps. We continue searching in the charts. I'm going to explain to you the fair value gap that we actually do look for. And before a fair value gap is formed, another thing we want to look for is like 2 consecutive bullish candles before that impulsive move. And the impulsive move should be strong enough as well before breaking structure. So right now on the charts, we don't see any of just what I've explained right now. We don't see any of that on the charts at the moment. We are going to continue forwarding price to actually look for what we are going to see that is going to be favorable to us. That looks like a very good impulsive move, but you can see 2 bearish candles before the move, right? Nice impulsive move. It has not yet formed the fair value gap because we have not yet seen the third candle, but that has to happen when breaking structure. It broke structure, formed 2 bearish candles before the move, but as you can see, it did not form a fair value gap. On this other side, you can see 2 bearish candles before the move, but now the thing that makes this fair value gap not to be one which I'll be looking forward to trade is because this move is not as impulsive as I want to see. You see how this candle is very bearish? That is what we call impulsiveness, and that is the kind of impulsiveness I want to see in a move that I want to trade. Now, you can see this is some kind of good impulsiveness, but the problem with this now is you can see it came back and did not form a fair value gap, regardless of the fact that it had 2 bearish candles and also it broke structure, but there was no fair value gap. So still no trade yet. Another problem with this one, you can see 2 bullish candles before the bearish impulsiveness. This impulsiveness actually looks good as well. It did not break structure, right? You see here, it did not take out this low to break structure before coming back to fill the fair value gap. The fair value gap was filled before price actually maybe continued going down or going upwards. This is not a fair value gap that we are going to want to trade. Nice. Now, this is something that we do love because you can see this is some good impulsiveness. You can see there are two bearish candles before the move, and also it took out this high. Definitely that is a break of structure. When this happens, you see there was the first fair value gap, right? When this happens, one other thing that I look forward to is, now I need to see the next candle be bullish. When the next candle is bullish, or if the next candle is bullish, then now another thing, you see it has actually gone higher again. That is increasing the impulsiveness of the zone, and that is something that I do want to see. At this point, you can see very clearly that we have a very good impulsive move to the upside that formed two bearish candles before the zone, and also it took out actually several highs, showing that it's a break of structure. At this point, what I want to do is I want to draw my fib from the low to the high of that zone, and you can see there are so many fair value gaps that have been formed, but we are not going to be taking our trade maybe on this fair value gap high here or this high here, because if we do that, our risk to reward on the trade is not going to be very good. What I always like to do is taking my trade at the 50% or the 0.5 level of the fib. So we are not using the fib as an indicator, but just where to take our trade and also where to put our stop loss and our take profit. So that is what I always like to do, and that is where I'm going to put my entry. I put my entry at the 0.5 level of the fib. Also, I will put my stop loss. Normally, I always put my stop loss at the 1 level, but now it has formed two other fair value gaps. That means that if I'm taking based on this fair value gap, price should not come back below this low. Then for my take profit is going to be at the negative 0.5 level of the fib. So now I have placed my trade. What I do next is I take off the fib. Then I look forward to seeing what price is going to do. Exactly right here, we have been filled in price. Another thing I like to do is now the range, you can see the range that we looked forward to before getting the 50%. Whenever price gets above this, now based on the fib, right, this would have been the 0 level of the fib. Whenever price gets above this level, I always love to take my stop loss to break even or just a little bit above break even. Then because at this point, I'm going to be risk free on the trade, and I look forward to price getting up to the high, or getting up to my take profit. As you can see in price as well, this also looks like a good setup. You can see there were two bearish candles before the good impulsive move that actually formed a very tiny fair value gap here, another very good fair value gap here with a nice bullish candle. At this point as well, I'm going to place another fib right here from the low to the high. Entry should be right here at the 0.5 level. Then stop loss should be right below here, and you can see the take profit of this one is going to be above this zone right here. So let's do that right now. Now, you can see that price has actually gone above the 0 level of our fib. Now, when price does this and price did not fill us in, I always just like to take myself out of that trade. I just like to cancel the trade because probably price might want to reverse at that level. So now I'm just going to wait for price to get to my take profit. There you have it, guys. You can see the trade actually went to our take profit, and it's just the same and very similar to the screenshot that I showed at the beginning, which I'm also going to show here right now. This is a game changer strategy, and I would love each and every one of you watching this video right now to go backtest this strategy for yourself. And if there's any worry you have, you can drop it down in the comment section down below. And also don't forget to leave a like on this video. If you want a more in-depth explanation into this strategy, there's going to be a video that is going to be showing right now on the screen, which you can go there right now to watch. With that said, catch you guys in the next one.